Thus, a number of regulators as well as ordinary savers or customers have started gravitating towards some sort of a model which is more sensible, which is more ethical, which is fairer, and which takes fewer risks. And thus, a lot of people have been coming towards Islamic finance. Islamic finance imposes certain constraints on how conventional finance works. For example, the first thing that it does is it disallows usury. So for example, you may have heard all the debates about Wonga and so on and so forth. This would not be a debate. This debate would not be taking place, in an Islamic finance context, because it simply disallows lending money to people who have fallen on hard times and thus exploiting at exorbitant rates and thus exploiting their misfortune. It does not allow interest because you're a big bank, you're lending to me and charging interest. What exactly are you doing? In Islamic finance, you have to do some work in order to make some return. So you must share risks. So there is no interest. The second thing it prohibits is speculation. So you cannot simply speculate how markets will behave and bet on that, 2 years from now or 3 years from now or even 6 months from now. So in Islamic finance, you can only sell what you own. What you do not own, you're not allowed to sell. Finally, it also makes sure that you only invest in ethical or noble causes. So anything unethical, anything socially responsible is not allowed. You cannot invest in that. So there are certain very strict constraints that Islamic finance puts on the conventional financial model, and which of course, is regardless of the profitability potential of all these things. One of the things that really caused the crisis was excessive leverage on part of conventional investment banks. And you can make tremendous returns by leveraging yourself 30 times, 40 times, and so on. But you're also exposing yourself to vast amounts of risk in that. In Islamic finance, that is not allowed. So it's more conservative, but it's also much safer. So they weathered the storm much, much better. They outperformed all conventional banks by a great margin. The UK government has also constituted a task force on Islamic finance to study it in greater detail and to make London a hub for Islamic finance. So yes, for a long period, Islamic finance was pretty much confined to Islamic countries in the Middle East or Malaysia and so on. But it is fast coming into or entering Western markets. It just so happened that BCCI came out of an Islamic country, which was Pakistan, but then it quickly spread to about 60 different countries, regardless of whether they were Islamic or not. The banking model in BCCI was pretty much in the conventional model. So yes, there was an association with an Islamic country, and it rapidly rose to become, a big bank. But that is where the similarities really ended. Islamic finance program will provide an introduction to Islamic finance and banking. It will also cover the whole product profile in Islamic finance. It will also talk about various models that are used in Islamic finance. And of course, it will also talk about strategy and innovation in the context of Islamic markets or with respect to Islamic finance. The program should benefit a number of people, starting from bankers, both from Islamic and conventional banks, and also includes investment bankers, fund managers, central bankers, regulators, and simply people who have or do not have anything to do with Islamic finance markets, but simply wish to know more and want to enter this rapidly developing category. The reason why it's being held in different locations is, first of all, to cater to the needs of various people who are located and working in those parts of the world. And secondly, for us to also explore different opportunities that different parts of the world offer in the context of Islamic finance.